Every time the market wants to feel better about the U.S. administration lightening up on its protectionist trade campaign, it gets let down almost immediately thereafter. The U.S. administration may indeed be ready to make some concessions, but it's also clear there's nothing that suggests it plans on retreating from its stance on trade, and if anything, it will continue to push forward in order to achieve the objective of rebalancing the U.S. economy through a renegotiation of its trading relationships with partners around the globe. Into Thursday, it's Germany that's getting the attention from the U.S. administration, with the president threatening sanctions for Germany's continued support for the Nord Stream 2 gas pipeline between Russia and Germany. The president's comments also follow earlier criticism of the euro and other currencies as devalued versus the U.S. dollar. All of this has set the stage for a reaction out of Europe, given the potential impact of unwanted euro appreciation and a downturn in investor sentiment. And so for the moment, it's back to risk off, which we think is the direction global equities should be heading in anyway at this point in the cycle, over 10 years after the global financial markets crisis that ushered in an unprecedented wave of monetary policy accommodation and government stimulus. Simply put, there isn't a whole lot left in the tank to support negative shocks to the global economy, and we believe global equities are flying dangerously high on borrowed time. Looking at the calendar for the day, it will be interesting to see what the SNB has to say about the latest wave of Swiss franc appreciation that it surely won't be happy about. We also get Eurozone industrial production and U.S. initial jobless claims. Earlier today, Aussie took a hit on softer consumer inflation expectations and some distressing components in the Aussie jobs report despite the not-so-bad headline reading. Of course, Aussie was already way down on the broader risk-off theme. German inflation reads were also out and came in broadly in line with expectation. That's all for now.